next conversation, and certainly building up on many of the themes that have been highlighted, and we make our way back to the money element. Following the presentation that we had from Tilda, of course, lots of opportunities in agriculture, Uganda, hint, hint, and maybe Zimbabwe if we manage to get our ducks in a row. But of course, this does speak to financing and unlocking the capital that is necessary to tap into many of these markets. But of course, for capital providers, they need to manage and understand and work within the constraints of a very difficult environment. That marks the theme for the next panel discussion, which will be moderated by Shamin Sukia, Managing Director for Perigium Capital in Mauritius, followed by panelists who will be joined on stage. James Mugerwa, who's the Managing Director for Pearl Marina and Country Head at Centem Uganda. Ilaria Benucci, who's the Head of Construction and Real Estate at CDC Group, United Kingdom. Olivier Granit, who's the Managing Partner and Chief Executive Officer of Cassandra Capital Management, and Olaf Schmidt, Manager of Property, Retail and Hotel, Health and Education and Manufacturing Investments at the IFC. Please give them a warm round of applause for this panel discussion, and should you have questions, please do feel free to engage. That applause, we can restart it now. A warm welcome.
Good morning, ladies and gentlemen. So welcome to this session, which is titled Capital Providers Overcoming a Constraining Environment. And I will not dwell upon the elaborate sort of presentation by our MC. So we have James, Ilaria, Olivier, and Olaf with us, learned panelists. So it's a great pleasure to be amongst you this morning. So just some figures, perhaps you've just heard before. So Africa needs about $90 billion for infrastructure in Africa, $1.4 trillion needed to tackle the housing crisis. And by the year 2025, it's expected that 37 mega cities will sky the world, with 12 of these being in emerging markets, so Africa. By year 2050, 68% of the world's population will live in cities as compared to approximately now 55%. And that's very important about sustainability. So 70% of the world's energy-related greenhouse gases use 2% of the land actually. So we've heard previously about the appreciation of the hard currencies like the US dollar, etc., vis-a-vis local currencies. So these are the sorts of metrics that would act as a sort of background for our discussion with our panelists, although we choose to confine ourselves to the topic of providers of capital. So I would turn now to our distinguished panelists. So I would like to launch sort of the first questions so I'll start from the far end, from my right there, with Olaf. And we'll proceed like this. So we'll have a series of questions. I'd like to kindly request our panelists to be as short as possible and brief and concise, of course, so as to make the most of the questions that I'll be asking you. And of course, we'll try to, we'll await some questions from the floor after the panelists would have taken the questions in turn. So the first question is about, what do you think, Olaf, are the obstacles faced by project owners and suppliers of capital in funding projects? And how have these evolved over time?
Excellent, thank you so much. Just to perhaps clarify, because recently I met a company, they thought IFC stands for Institute for Consumers. It's not, it's International Finance Corporation, so we are the private sector arm of the World Bank Group and do roughly $17 billion of financing every year. So the question is a big one that you asked, and actually some of my colleagues prepared a list and I counted. It was 25 obstacles, right, which I could go through, but then with a conciseness that would be difficult. So I will stick just with a few that we see a lot when it comes to kind of the capital side. So in the real estate sector, where we cover really everything, I mean, be it commercial or hotels, or even health education, right, where you see more and more activity, as we just heard from the previous speaker. I think often capital is one of the things that is short, right? And what we often see then as a result is that you end up with an over-leveraged project. And that is where it becomes then really difficult to make it bankable, right? So how do you ensure that you have enough capital providers so that you have the right leverage for the project, to give you the breathing room to really implement whatever it is, the hotel or the mall, etc., to then let it ramp it up and get out. From a capital provider perspective, so us, we invest both equity and debt in our projects, depending on the situation. You then need to look, many of the countries, right, have quite a few macro challenges. One of the things, right, we all, I think, who have exposure to Nigeria, for instance, with the devaluation, it's very difficult. How do you make sure that you have as a foreign investor, the right US dollar or euro return that you need in order to make it, from a financial sustainability perspective, feasible. So that's, one area which I often see as a common theme. And then the second one is the whole question of exits, right? How do you exit from these investments? Often in Africa, you might end up in a situation where you have a single asset, and who will buy that, right? So that you have a good way out. But then, that a little bit sounding not too optimistic, but I think at the same time we see more and more also new instruments coming to the continent. And some of them, which we are quite eagerly engaged, is, for instance, in the health education space, as the previous speaker was saying, there is real growth. And I think what we see, for instance, in a sophisticated market like South Africa, you see difference between OPCO and PropCo, and where we then can finance, the PropCo side, and have the kind of the institution who really runs a hospital, knows how to run a hospital, carry out the OPCO side. So I think that's quite interesting. Or green bonds, green loans, I think it's a big area. We will talk perhaps a little bit later about the whole green aspect, which I think can be interesting. So those are areas where I think we can, innovate and bring in new things and, overcome some of these obstacles. But I will pause
So thank you, Olaf. Maybe I'll just add something before Elijah proceeds. So you were talking about exit. I think the African capital markets have to gear up, I think. It's a good place to exit a stock exchange platform. Yeah. So Elijah, please.
Thank you. I think that a couple of the items that Olaf talked about are quite common for all of us investors. I would say that one of the issues we have often is size. So we tend to invest not in asset, but in platform, in companies. And in this case, what we need to see is that a business is scalable. So the one-off asset is not really what we're looking for, because we are not suited for that kind of investment, because obviously we are, it's very difficult in real estate to build a portfolio of small properties all over Africa, because it would be impossible basically to manage. So we need something which is scalable, and often that's not the case. Secondly, often we find ourselves to be the majority, the anchor investor, the majority owner of a business, which is not something we particularly like, because we like to be significant but not actually controlling the business. And the reason here is that it is difficult to find like-minded investors, long-term balance sheet money. So that's sometimes another issue. So to me, to find the right co-investors has proven difficult. Thirdly, illiquidity. That's definitely a big issue, because basically when you do an investment, you have to have a route to exit. And in this context, it's extremely complicated. As you just mentioned, capital markets are not really functioning particularly well. So also that is a constraint. And then I would also say, you say that over leverage. Well, I don't totally share this view, as in real estate to work needs leverage, and leverage in this part of the world is extremely expensive. And so sometimes the returns for the risk you're taking on are not adequate. So it's sometimes a question also risk-adjusted return. And so again, this is why the market, perhaps is one of the reasons why the markets are illiquid. So it's a combination of factors, and so sometimes it's very difficult to unlock the market as such.
Thank you, Lara. Please, Olivier, can you just please add some new stuff to what your colleagues have just expanded upon.
Casada is an independent investment platform. We have so dedicated to hospitality in sub-Saharan Africa. We had our closing a few months ago. We have raised $500 million US dollar. So we are investment platform with a scale, as per what you have mentioned. So fully aligned on your point. And I know that you had a lot of numbers, but just to illustrate, I will just take one. If you look at hospitality in sub-Saharan Africa, in terms of supply, we use in our industry a ratio which is number of rooms per 1,000 inhabitants. So if you look at this ratio, this is, if you take sub-Saharan Africa, this is globally, this is 5 times less than what you can find in North Africa. And this is 12 times less in terms of density versus the average worldwide. So you can see that there is a need to develop hotel infrastructure. I was last week in Addis Ababa at the hotel investment conference, and like every year, everybody is fully aware of this. Everybody is giving a certain ambition and targeting a number of development. The reality, unfortunately, is far different. We have 3 main challenges. The first one is linked to the operational performance, and in fact, the lack of travelers, especially during the weekend. So the occupancy rate is in fact lower by 10 to 20 points, depending on the city, compared to what we have in the most performing market. And here we touch all the issue relating to the connectivity, some visa in some countries, which explain that today Africa is less than 5% of the number of travelers worldwide, but for which we see some things moving and we can expect some improvement in the future. But you have to be fully aware of this. Then we have discussed about the cost and the access to financing. And also the cost of construction, which is a key issue. I just would like to add one point regarding the financing. This is also the quality of capital. So often capital is missing, but there is a number of projects. I'm sure it's your experience. You meet with hotel developer who are looking 5-10 million, and then we realize that it's probably twice the amount. And more than that, the duration of the capital is not the right one. So to cut a long story short, there is a need to bridge the gap, and there is a need to bring solution, and that's what we are looking at Casada, to bring some financing. We have the capacity to co-invest, to bring some financing to the project, to bridge the gap and to have a scale and to facilitate sometime the link between a local investor and financial institution. And we bring the expertise and the scale that is needed to develop the project.
Yeah, Olivier, before I turn to James, I would just like to add, of course, I think the tourism sector has been booming quite recently, especially in the sub-Saharan Africa, including Mauritius, for instance, which is a long-standing destination for tourists. And of course, recently, even in Mauritius, even the region, we've noticed, we've witnessed this sort of separation between, so the creation of an operation company and a property company, of course, segregating the risks associated with property at the same time, and also as opposed to the operating risk. So it's a challenging market indeed. And of course, if you put into the equation the currency sort of conversion of the US dollar into local currency, etc. So this adds up to the sort of risk and challenges that you face in Africa especially. So I would like now to turn to James, maybe from Uganda, from Centum. Thank you, please.
Thank you very much. Well, just briefly on Centum. Centum is an investment company listed on the stock exchange in Nairobi and cross-listed in Uganda. So we traditionally an investment company, and we have invested our money in different portfolios, of which real estate is currently just under or around 50%. So we, over the years, we have moved from getting money and investing it in these portfolios to actually bridging the gap that has just been mentioned. So we have moved to developers. So we actually are developing units right now in the countries that we operate. We have a pipeline that we are working on right now, and working on means we are building, delivering of about 5,000 units ourselves, plus another 5,000 units that we are working on with partners, different joint venture partners. The model that we have worked on and which we find has proven to be successful is taking the risk and bridging these gaps that the capital providers continue to mention. All the items that you have heard about scale, cost of construction, marketing, are things that someone has to stand up and address. So when you then do that, when you go into a market at a very early stage, which is what we have actually done. In Uganda, we entered the market about 6 years ago, taking a project from land, empty land, to finished products with all the issues about urban planning, financing, infrastructure, and so on. You can only do that if you are really well structured. And then once you do that, it almost becomes easier to find partners who are willing to invest in, because you've done all the dirty work and all the heavy lifting. But it takes some time, and that's the approach that we have embarked on. And we are happy now to see that, yes, once you've done all the de-risking and you've done ticked all the right boxes that you need to tick, then it becomes easier to make that project attractive for all other investors. So it's worked out for us, and we continue to want to continue on that journey. And that's why we actually are no longer developing for ourselves, but we are also partnering with people who have faced similar challenges and are now coming to us, because most of the facilities and the services that you need for the implementation of these large-scale projects, we have in-house. We do the master planning, we do the designs, we then go out and select the construction companies who deliver, we do the marketing, and it's turned out to be working at relatively competitive prices for the markets in which we are engaged.
Thank you so much, James. So I have one question for you, Ilaria. We've talked about obstacles, providers of capital on the one hand, and project owners on the other hand. So you have investors, those who want to put in their money. So do you think that they properly understand, so in terms of returns, risk, etc.? And so the likes of CDC, IFC, so what would they need in order to deploy capital in projects?
Well, is this working? Yeah, I think it's the same. If you like, is a similar answer to the one we gave before. So there are certain obstacles, and therefore, what we need to see are projects that actually address these challenges. Size remains one. I would say that another, at least for us, for CDC, what is important is also to see the proper structure. And the proper structure, actually, Olaf mentioned earlier. Sometimes you have projects that either meet every single milestone or are not sustainable financially. And therefore, what we normally, as we all know, in real estate, often things do not go according to plan and normally take longer and they cost more. So you have to have a balance sheet or a structure which is able to sustain also temporarily macroeconomic problems or linked to specific geographies. So you really have to be robust, because without robustness, especially for people like ourselves, where we end up to be often the investor with the deepest pockets, it's very risky to get involved, because you know that at the end, if you need to put more money, you are the one who actually has the money, and therefore it's a kind of difficult position to have. So I think that solid structures is probably one fundamental point. I think that then again is a question of risk returns. I can take a long-term view because of again, I'm investing balance sheet money, again, just for people that CDC is fully owned by the British government, and we invest obviously balance sheet money, long-term investment. But still, the point about risk return is there, and Olaf mentioned yesterday, one of the issues is also the FX devaluation, and therefore when you calculate your returns, you calculate your IRRs, you calculate whatever, if it's in local currency, then you have to add the devaluation, which is between 3 and 5% per annum. So how do you adjust for it? I would say that the third one, which is probably more linked to DFIs, if you like, so people like ourselves, is also a real commitment to environmental and social standards, real commitment, felt commitment, not just, we want people that believe that this is the way forward, and also in kind of sustainability and so on and so forth, which we strongly think it is, also from a commercial point of view, but has to be in the DNA of the project, the sponsor, the developer. Otherwise, it will be very difficult to find long-term partnership that we're looking for.
Thank you, Ilaria. So, we're pressing for time. So, Olivier, I just want to turn to you. So, Olivier, so very briefly, from a fund manager's perspective, so what, according to you, would be the criteria to consider when investing into projects, both from a project and country perspective? Very briefly, broadly.
This is a combination of what has been explained, like for all investors. So you have all the criteria that have been developed, and I believe there is no need to come back this in detail. But from the geopolitical macro environment to some very specific point as investor, such as repatriation of capital, taxation, foreign currency, as we just discussed. And this has to be combined with the specific that are related to the industry. So in case of hospitality, we have some very specific criteria which are linked to the location, to the understanding of the market, to the positioning of the product. And which means that something important to have in mind is that location, the way you look at a city and the way you look at consumer is not the same if you invest in Paris, London, New York, where there is a certain visibility of how to position the different part of the city versus the growth that we have and the way that most of the city are evolving. So there is a very strong need to have a deep understanding of the market, which means that this is a very multidisciplinary approach. And you need some strong skills that are very diversified. And that's what we're trying to do with our team, which is quite unique, where we have a lot of people coming from private equity and investment. But then this is combined with people coming from the hospitality, from the construction, and people having an experience in different parts as management in different parts of the continent.
Thank you. I think experience, expertise count a lot, of course, in property development. So I have one question for the three of you. So Ilaria, James, and Olaf, with regard to the problem of housing in Africa. So I think I counted a figure of 1.4 trillion that we know about that Africa needs to tackle this housing project going forward. So what, according to you, would be the key constraints to funding affordable housing projects as opposed to other non-traditional asset classes in Africa, of course, and how do you believe these will change from the short to medium term?
Yeah.
Olaf, please.
Thanks so much. I mean, that's perhaps one of the toughest nuts to crack. Because it's so interlinked as a sector that you really need to go in, I think, to find holistic solutions. So when you look at the market, there is no point of building the houses if there is no mortgage offtake. So if we take a big country like Kenya, right, and I were to do a little survey, how many mortgages officially are registered in the country, you would think there are. I mean, the first time I heard the figure, I thought there are a few zeros missing. It's like 30,000 a year, right? So it's basically inexistent. Of course, you have cash payments, you have other schemes, but like the proper mortgage market. So what you need to do, and I think that's what we are trying to do in quite a few countries, is to work on the different elements. So you work with the government to put all the, let's say, regulatory framework in place that is needed, like land titling, etc., which is a long laundry list that needs to be done there. But then really work together, right, between the mortgage side and the supply side. So what we have done, I think, in a couple of countries quite successfully, because the governments are very actively pushing. And again, the previous speaker mentioned Rwanda as an example. So in Rwanda, we are very active in the housing market. And I think what we do there is really provide a refinancing company that can help supply finance to the local banks to then offer mortgages, while at the same time bring in the supply side solution, right? Where you have to look for, experienced developers who can build those 1,000 homes. I mean, often you get project proposals, let's build 10,000 homes. Now, to pull 10,000 homes off in Africa, I mean, that's really not an easy undertaking. So therefore, you need to have those both combined and have them work together, as we, I think, want to see some more successful cases. Côte d'Ivoire is another one where we have been, I think, quite actively engaged, again, together with the government, because you can't do that in isolation housing. The last point I would make is, and that is, IFC, as many DFIs, has a double bottom line, right? So we look at the financial sustainability of the project, but at the same time, we really want to have impact. So one of the things in our last capital increase, which was very significant last year, as you might have seen in the press, $6.5 billion, is that we become much more active in Africa. And not only in the big countries, but also in the smaller countries. So therefore, we have started with a thing called private sector window, where we can try to work and find concessional finance solutions. That's relatively new to us, but in small countries, if you try to do something in Niger, you will not find the platform that was earlier mentioned to pull off, 20 commercial buildings or 2,000 housing, developments. So that's where we are trying to see how can we, in more complicated markets, find the same solutions that you might find in more sophisticated markets like South Africa, or perhaps Kenya in comparison, even so it's still nascent in a way, as I mentioned. That's
so
in a
nutshell.
nutshell.
I think, Ilaria, maybe from the CDC group point of view.
I think, the challenges and the issues are very similar to the one that Olaf, actually, they are exactly the same. So it's a question of course, it is supply, but it's also demand. There are no more, you mentioned Kenya. In Ghana, there are 6,000 mortgages. So the whole thing, as you say, it looks like, is it true? And then you have to see also the level of affordability and so on and so forth. The only thing I would add is that we're also working on holistically. So you have to look at demand, but you have to look at supply. So try to reduce as much as possible construction cost and therefore improve affordability. But it's also a question of working on demand. What we are doing, which is quite innovative, and let's see if we're going to be successful or not, is we are trying to create rental platforms. Because basically what developers need to be able to deliver big numbers are off-takers. Because they cannot sit on their units for 5 years. They have to be able to sell them. So the idea is that we create rental platform, we guarantee the off-take, and the problem is then becomes property management. And this is what we are trying to achieve. And I think that's a way to unlock the market, we hope. We shall see.
Thank you, Ilaria. Maybe James, from your point of view, with regards to Uganda and the neighboring countries, so what's your take?
Thank you. Every time we come here, we actually talk about affordable housing and the gap between demand and supply. And unfortunately, I think we still bring out more or less the same solutions, concessional funding and so on. Our experience, practical experience on the ground, both in Uganda and in Kenya, as we speak right now, we have in Uganda we have 400 acres on which we are working. Of those 400 acres, we deliberately carved out about 20 acres, and on those 20 acres, we decided to do affordable housing. Affordable, of course, is a relative terminology because it depends on how much money people have available to fund to buy those units. We think, however, and actually we don't think because the market has proven that is working. We have units that are going for around $30,000, which is the smallest, about 50 square meters. And the demand for those units has been exceptional. We've actually sold those units way beyond we even started construction. Now, those units, the construction cost of those units is in the range of about $200 per square meter. But these are units that are being sold at the market. So if we were actually to offer those units, if we were to construct them at a slightly cheaper price, we would come far below the $30,000 that you have out in the market. I think the biggest reason, one of the reasons why this has happened is we were able to bring scale, and by bringing in scale, we were able to find contractors who we could force to reduce their costs because they had visibility on the number of units we were going to roll out. We were also able to bring in financiers because they saw what we had done. They saw we had done the master planning, we had invested in the infrastructure, we had sold out to the market. We did not start building anything until we have sold 30%. So even the investors and banks who were coming in had clear visibility on the off-taker side. But if I went even a step further, in the Ugandan market, you have institutions like NSSF that have, of course, a lot of capital, and they are willing to offer developers off-take guarantees of units within certain frameworks. I think ultimately it is doable, and people can do it. And I actually also think that it's time that some of the developers who have the capacity should actually go out there and start doing it by reducing maybe their margins, using their muscle power to negotiate better construction rates, showing that they can execute. Because it's one thing promising to deliver units, it's another thing deliver. You really have to go out and do them and deliver them. Once that is done, then I think we'll start making progress. Otherwise, we'll unfortunately still just leave it at an academic level. I think it can be done, and some people are actually doing it.
Thank you, James. I just have to stop you because we're pressed for time. So we are left with only one question. I think we'll do it like a sort of concluding remarks. So we've spoken about finance, we've spoken about the providers of capital, of course, the project developers, right? Housing problems in Africa, etc. So I would like to turn to each one of you, just like a very short sentence. So I think sustainability is a very important word. So we're talking about green technology, green buildings, the ESG components, etc. So I would just like to turn to each one of you, so in turn. So like concluding remark, based on what we've discussed since up to now. So to you, so what are the sort of ESG aspects, or what are the sort of challenges in terms of bringing green technology into Africa, so into the equation, to the sustainability equation? So turn in turn, I would just like to hear very briefly from you, because we'd like to hear a request for a few questions or one or two questions from the floor afterwards.
Sure, I will try to be brief and just will focus on green building. I mean, we are extremely actually excited about that opportunity. As you might have seen outside, we even have a stand called EDGE, which stands for Excellence in Design and Greater Efficiency. And the whole point is to really showcase in more and more examples, be it in hospitals, be it in hotels, in shopping malls, that by investing, very, kind of proven technology in your building, you can reduce your consumption, and that is not only electricity, it's electricity, water, and building materials itself, by 25% at least against the local benchmark. We do that basically in any project that we finance right now, on the continent, also elsewhere. And I think that the real future here is that because you have a very tangible benefit very soon, and it becomes, with the descending prices of, for instance, solar panels, more and more affordable, I think we will see that really grow exponentially, like a hockey stick going forward. I give one example. We just financed a small mall in Ghana, completely self-sufficient on solar panels, off-grid, can do it all with solar panels. And I think that's very exciting for us, as again, because we do look into impact and how to scale this. And that's where, of course, again, platforms become very interesting, or some of our, very large clients, one of our top global retail clients, they have 12,000 stores. So we are talking big, and they roll out the EDGE certification across the 12,000 stores in developed and developing markets. And I think as more that we see that, the more the green building kind of tangible benefit to the property, kind of owner will become tangible. So I will pause here.
Thank you, Olaf. Ilaria, briefly.
Very briefly, I don't have much to add, because actually we abide ourselves to the EDGE standards. Actually, all of the projects we're investing now, we require these standards, and I think that they're not just sustainable in line with what is happening in this world. They look at climate change and so on and so forth, but also commercially more interesting. So I think there is no reason not to do it. And actually, see here, Africa Logistic Properties was the first EDGE certified logistic development in sub-Saharan Africa. So we really believe in it.
Thank you very much. Olivier?
Very briefly, but a few comments. First of all, fully agreed, it has to be part of the DNA. It's not something you tick a box to make it nice. It's how you drive your decision, how you recruit the people, how you position yourself, what kind of values. It has to be totally be part of your strategy and focus. Hospitality is about people. We are an industry with more than 350 million jobs worldwide. So we provide jobs, we provide training, we can provide a career and opportunity for people with low qualification if we do properly our job in terms of training. That's our responsibility, that's what we do everywhere. And there is a lot of debate around the growth, but is growth generating job or not? Hospitality is growing and is generating job. Last comment, it's the good news, and fully agree with what has been said by Olaf, the 20-25% minimum saving is what we can see. So there is not anymore, like in the past, what about my return? How much green I want to be and what will be the impact on my return? No, today you can make savings and in fact, it's a good economical decision. So you can stick to your values, make something that is sustainable, that makes sense, and at the same time that is generating a positive return.
Okay, thank you, Olivier. Before I turn to James, just one comment on your. So if it's not present in the DNA, then you have to resort to cloning. Thank you. Please, James.
I fully agree with that. We faced a lot of challenges at the beginning because of awareness and also because of costs to apply environmentally friendly technology. One way we have solved it on the 3 big projects that we are implementing right now is by becoming ourselves enforcers. And basically we are no longer just developers, but we are actually building small municipalities. So we integrate solar panels, but we also do the maintenance. We install water meters so that we control the quantity of water that is being used and wasted. We buy in bulk electricity to top up the power generation that we have. So basically we've taken on the role of actually enforcing it, and that means that whoever buys units from us is not just buying and walking away with the product, but is married to us. So we actually force people to sign guidelines and rules that we enforce and manage on the estates that we are carrying out. It's just an additional thing we've taken on, but at least we ensure that in one way or another we are contributing to that.
Thank you very much. I think we don't have time for any questions from the floor, so it's finished. So thank you very much, dear panelists, and thank you to ladies and gentlemen for bearing with us. Thank you.